Toronto real estate prices have recovered from the losses from last year already? Yeah, the year over year numbers are almost positive. So make sure you stay tuned to find out more because not every single segment of the market has recovered, but one of them recovered. Big time, big time. Now, if you are looking for some help on how to navigate this real estate market, whether you're looking to buy, sell, or invest, or you're just looking to kind of talk with somebody on our team who has a very education-first base and data-driven kind of way approach to real estate, buying, selling, and investing, then you can book a call with me using the link that's on the screen. It's right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and a question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zen, and I run and operate a RE/MAX brokerage in the Greater Toronto area on top of making awesome educational real estate content just like this one for you. And if you're enjoying some of the content we're putting out there, make sure we spread the knowledge by smashing the like button and subscribing to the Prime Properties channel because it does take some time to compile all this data for you to spread the knowledge so you know exactly what's going on because we always want to take a data-driven approach to a lot of things as opposed to just be like, I wonder what that's going to be. And the last little bit of housekeeping is I jumped onto the Canadian Real Estate Show with Daryl and TK to kind of talk about what the Canadian real estate market looks like and really kind of the depth of Toronto real estate. So if you want to check it out, there's a little dot up here. Check out the channel and make sure you give them a like and subscribe as well. And the numbers for May are out and we are basically where we were last year. We're just like 16,000 less than what we were last year in May 2022, which was about a year ago. And that is just absolutely wild because we have essentially recovered. Yeah. Now, do keep in mind, using the traditional way that the media is looking at these numbers, which is the year over year methodology, we have recovered. And I, for the longest time, have generally tried to always use month over month in a volatile market, which we're technically in right now. So while prices are up like 3.17% from last month, you have to remember that's on par with 2022 prices only because we're now entering that period of time where last year in 2022, prices were falling down, right? This means that for the next few months, despite the seasonality slowdown that comes with traditional summer, again, with normal seasonality, which I've talked about many, many times before, right? Prices should be coming down month over month from the annual seasonal norms. But when you look at it from the year over year numbers, it's going to look very strong because last year was coming down like this. And now, even if we go up or maybe flatline, it's going to look like the market is appreciating year over year. And this is very, very important for you to understand because depending on which perspective you're kind of looking at the numbers from, it could spell disaster or it could spell, bull run. And we saw this last year when we circled around from the pandemic numbers, right? So it's getting kind of wonky when you compare stats, which is why I need to explain this to you so you understand what's going on because we're comparing stats that are going like different directions. So as you can see in the chart I'm going to put over here, the month over month numbers are up 3.71%, give or take, I think, which is 3 times higher than traditionally what we would get when we go from April to May, of like a general increase of 1% in the last 20 plus years. Again, I do not think this is a bull run. It's just an above seasonal norm change with pent up demand and low inventory from low transactions in the last half of 2022 because nobody was buying or selling and everyone who was wanting to do that because of life reasons pushed it to right now. And anecdotally, boots on the ground data, I've already seen activity slow down and there's a lot less offers, but it's not going to show up in any of this data until next month, of course, meaning like when, I guess, in July when the June numbers come up. Now, sales are up 20% back to around 9,000, which is very normal. We're no longer at 20-year lows because new listings were up 33%, which is also, again, back to historical norms, right? So when I was saying, look, we would have more sales if we had more listings, there you go, right? Because of that pent-up demand. Now, this pent-up demand may be gone, so we'll see what summer brings. And this is because higher prices make sellers want to sell because they can get the price that they want, right? They don't want to sell in a bad market. Now, active listings are up 14%, which is pretty good, but not quite back to historical norms, which is why inventory is still low in certain segments of the market, especially like in Toronto core. And you can see the months of inventory still went down a little bit from last month, and we're at like 1.317, and it's down about like 4%, which again is kind of normal, but we should see it build up over summer. And hopefully, because otherwise we'd be very low inventory going into a fall market. So hopefully summer gives us a little bit of relief, right? Now, if you look just at Toronto pricing, you can see this is the big boy who has made everything really high. The detached and the semis ripped at 7% increase month over month and 5% increase month over month, like respectively, which is wild, right? That's dragging all the prices up. And if you ask me, this is normal because it's a reverse of the pandemic. Condos were up 4%, which is a little bit more surprising for me, but that's normal. Looking at the 905, you can see over here, the same thing across the board, but obviously Toronto's carrying most of the weight because it's seen most of the appreciation. Prices are all still up, just not as strong as Toronto. Now the 905 semis outdid the other properties, and this kind of reminds me of like what September 2021 was, where basically almost every type of freehold property in all of the greater Toronto area is at minimum $1 million right now, which is wild. And remember, in September 2021 was just right before we had that massive run up that, ended with like 400 basis point increase in interest rates. So just let that sink in for a sec. Again, I'm not saying it's a bull run, but this is where we are. So to own a low-rise home, we'll call it 3-bedroom, townhome, anywhere in GTA, the minimum easiest way to get in is $1 million. And we're not building these type of homes fast enough. And I would say from a demographics perspective, the millennial generation are all shifting into that segment of the market because of family growth, right? And I don't see this trend ending anytime soon because it's just a demographic shift, right? Now, looking at the change over here in this chart since the start of 2022, which, I'm going to phase out very soon with this chart because we're lapping the years and seasonal normals are going to be becoming very apparent to most people if they've been following any kind of good kind of data approach to things, right? But, given how much I've beat this drum already in the last like 2-3 months, it's just seasonal norms. But where you can see right now is we are essentially where we were in terms of average price. Same as last year, off by that $16,000, give or take, right? Which is a very small drop in the bucket, like I was saying in the beginning of the video. Now, from the start of January 2023, we are up 13.2% on average. Yeah, that's a lot. And keep this in mind, from March 2022 to December 2020, we'll call it the bottom, if you will, we're down about 24.5%. So we're a spread of 10% from the peak. Now, these are charts I personally use and look at all the time with my clients, but I want to show them to you, and I won't be using them as much in the future, but it provides you a little bit of context of the ebbs and flows of prices in different micro markets, right? And you can see over here in this chart, this is the average Greater Toronto Area home prices, meaning all of the entire market in the last 4 years. And that gray line over here, that's like just crossing the orange line, is where we are right now, which is we have recovered from the pricing, again, if you only look at it from a year-over-year perspective. And you can see that orange line right now was trending down. And the gray line, let's say we're going back to the seasonal norms, we may remain flat or down like 1 or 2%, but at the end of the day, it's not going to be going down as quick as the orange, which is why in the next few months, you're going to be seeing the year-over-year numbers look very, very rosy, right? Now, of course, things could most definitely change in the type of economy we have if we have a very, 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 very strong recession that just hits us really hard. Now, here's the chart for the 416 detached, which is basically pulling the averages up for everything. And you can see the gray line basically went rocket ship straight up in this year. Yeah, we're heading back towards the $2 million price point for a 416 detached right now. Yeah, pretty well. Now, for some context as to where freehold detached and 416 was at the start of the year right now to where they are currently is absolutely wild, because when I look at these, I know the seasonal norms, and like you have your big boy homes, like $3 million luxury homes come up and they skew the averages. But it went from like $1.48 million to $1.9 million, or that's up $427,000, or up like 29% from the start of the year. That's wild. That's the big boy that's pulling everything up. And again, this is expected from the spring market, but we're just a little bit above the seasonal norm. And just like the average prices in the Greater Toronto Area, the same price as last year, currently in for the 416 detached right now. Now, remember, this is a lot of volatility here in the last 4 years. You can see the lines go up and down. But it definitely, for me, it feels like the Toronto proper homes have kind of found their footing. And I think they're going to continue going up from here. And this is the same for like the 4 and 6 semis. And a lot of them are clustering in the same price in the summer months because it kind of dips down a little bit. But you can see it's still on an upward trajectory as well. As for the townhomes in Toronto proper, they're generally lagging a little bit behind in terms of pricing from the semis and the detaches. And you can see in this chart over here that like the towns have tumbled the most in like last year. But I would take this data with a grain of salt because there are really not that many like Toronto proper townhomes to derive a lot of value from this because it tends to be on a smaller sample size. Now, this chart here is for Toronto condos, and you can see that we've basically recovered from the fall of 2022, and we are very, very much well surprised the pandemic drop that we saw like 2-3 years ago. I personally think this is like a good thing for the momentum of the condo market because it needs to stay at that pace so that the pre-construction still kind of makes sense. Now, you can see here, interestingly enough, the 905 detached, very similar to the 4 and 6 detached, has almost caught up the year-over-year pricing. And despite the big drop off in the first quarter of 2022, again, it's still an upward trajectory right now. But we saw a bigger fall from the peak of 2022 in the 905 than Toronto, obviously, right now. Now, same thing over here. The 905s are doing a lot better because it's a more affordable option for most families, so you can get a little bit of home. But most people are still kind of trying to get to the detached home. Now, the same can be said for 905 towns. There's a lot of sample size for this, so this is probably a good data set. And I would say like anything in the 905 around the 1, maybe even like 900 to 1.2 remains fairly competitive as long as the home is in good shape, because that's just a type of subdivision homes that are very popular with families that are growing because they need the space and they don't want something really, really old, right? So these like subdivision homes between 0 to 20 years old. And as usual, the 905 condo just lags the pack. Now, it's been 4 months of very, very strong growth. Lots of prices have recovered from last year. And this last chart I'm going to show you is that the change in the months of inventory, because again, this is a very good indicator of where prices are going to go. So I think we're going to be at an inflection point where the months of inventory will start increasing in this month, right? Again, because I don't think we'll have that much sales and inventory should be building. But it's not like it's going to be anywhere we need it to where we have a less frenzied market, meaning we go from 10 offers on a home to maybe like 2 or 3, which is kind of normal for Toronto, but definitely not as crazy as what everyone's thinking in 2021 or 2022 after the pandemic, because we're just, again, reverting back to traditional norms. And I don't think anything will drastically change this unless like a big recession hits us, or we could be in one. I don't know, right? But I would just expect seasonal norms to swing around this price point and kind of the inventory, barring any crazy market changes. Now, the final 3 charts I'm going to show you to get you an idea. Again, we are reverting back to the norm, as I've been saying for many, many times in the last few months. Again, beating the drum like crazy. Here's the chart of the sales in May historically. And you can see we're back to the historic norms, which is cool. Very cool. Now, because we had listings to sell, like I was saying, we got those numbers. Now, here's the chart for new listings, which is, again, literally where we are for historic norms. However, the pent-up demand is still gobbling up a lot of these new listings, and it's a little bit below the historic norms for the active listings you can see over here, meaning the number of properties left at the end of each month to buy. However, I will note that I can see active listings in the last 4 years kind of about the same, and it's always kind of been like this. So while I do see some inventory building up, I don't see the active listings like say next May to go up really, really high, and we'll stay in this kind of like, May spring market because it seems like it's kind of the new norm. Again, unless we hit some kind of like crazy surge in listings from recession where people need some liquidity, similar to what we saw in Q1 of 2022. So I hope this gives you an idea of what's happening in the Toronto real estate market right now. And to summarize, what I'm seeing right now is we're going back to the seasonal norms. Numbers are a little bit blown out of proportion by media right now because, again, we haven't had seasonal norms since the pandemic, which I would say is 2019, right? So like 3 to 4 years or so. And all that we're seeing right now is normal. While we are having prices increase above the seasonal norm in the last 2 months, the boots on the ground data, meaning the stuff that we are seeing every day when we're transacting, tells me that the pace we're going into is slowing down, which is normal for summer. So you should expect a normal seasonal slowdown in the summer. The world is not crashing. The market's not crashing despite what some people may derive the headlines from. But where the fall will be, I think will be up to the sentiment of the market. Here's why. Because if we don't get a fairly big drop in the June CPI print from like base effect, because June last year was really, really high at 8.8, and maybe we get a rate hike in July, we could see a slower fall, especially, if we get a recession. But it looks like, since we're at least the 6 months out from an official recession, because the, Q1 GDP came in really, really high at like 3 point something%. Again, time will tell, but expect volatility going forward mixed with a little bit of seasonal norm, which honestly is, again, just normal. So hope this gives you an idea of what's going on. Until next time, your move, your future. See ya! Now that I'm done watching this video, I think you should check out this video. And you know what? Why don't you check out this video too?